Hey everyone, thank you for tuning in to another episode of The Honest Douche. Due to the pandemic and my best friend and I, not really having work, we decided that we would trade stocks together. We're best friends. We've known each other for over 10 years, and I've been trying to get him to invest with me for a very long time. And finally, he decided to give in, and we had pretty great results, for our first week as day traders because I'm not really a day trader. I'm a buy and hold type of guy. Like when I buy a stock, I like to hold on to it forever. So if you want to day trade, you have to actually come into day trading with the mentality of worrying about what's happening right now. Because for me, because I like to buy and hold, I don't really worry about what's happening right now and stuff like that. And that's the reason why we took one loss, but we were able to come back and still profit, because that one loss that we made, it taught us so much that we actually created a checklist, which I want to share with you guys. Um, so usually, like for all the stocks that we're investing in, right? Like we do our due diligence. We make sure that it's financially strong. But I'm going to show you. So we started off, with a few $1,000s. We put our money in together. He actually put in more money than I did, which I thought was crazy because this is literally his first time buying and trading stocks just this week, and he was able to make a profit, by us working together. So um, the first stock that we bought was Whirlpool, and as you can see right here, right, had the we put in the order on April 13th, which was this week, and we were able to sell it the next day for a $69 profit, basically $70. But then we got very excited the same exact day, right on the 14th, and we bought Citigroup stocks, and we actually had to short it. We had to sell it for 160 bucks. So we actually lost $100 um, uh, on our second day. It was a little discouraging, but because we both know each other and stuff like that, we were able to like pick each other back up. So who you work with and doing this is very important. And I wouldn't choose to do this with anyone else. Um, so then we lost, right? And then we're like, yo, never again. So we decided to come up with a checklist because we didn't have to take this loss had we paid more attention to the news. And we both didn't do enough due diligence. I figured, hey, bank stocks is great, right? Because my friend had a friend during 2008. He bought 30,000 shares of Citigroup when Citigroup was at like 90 cents. And then, 5, 6, 7 years down the line, his portfolio became like $5 million just with Citigroup alone. So I bought Citigroup with emotion, thinking of that story, but I didn't pay attention to the current events that, Citigroup's earnings probably dropped this quarter due to the pandemic, right? So if I were to buy and hold and I wasn't trying to sell it in a short period of time, it wouldn't have mattered. And I wouldn't have shorted it for 160 realistically. I would have held on to it forever until it made a profit and before I decided to sell again. But because we're day trading, we had to take the loss in order to keep the money moving, because we can't have our money stuck into one trade. We need to make sure we could pull the money out so we can keep making our flips, right? So as a result, we did this day trade checklist, which I want to go over with you guys, and we find it very useful. So we usually talk the night before, right? We usually talk the night before to see what moves we're gonna play. Because honestly, if you're playing it by ear, like the chances are you're walking in not knowing what you're doing, so you're gonna lose money, and that's gambling. And it's still a gamble, but we're making it more speculative in a way. Like we're we're lowering our chances of taking a loss because we're doing our due diligence, and we're doing our homework, right? So let's start off by looking at the checklist. So I pulled this up from Google. It's called the economic cycle, which I find very useful, right? So in these four, there's four different types of um, economic cycles, right? There's a time when the economy is expanding, and usually at a time like this, right, TD Ameritrade is recommending people to buy a technology or a consumer discretionary stock. So I learned from doing this week that the difference between consumer discretionary and consumer staples is consumer discretionary are non-essential items, like things you don't really need to get by. Meanwhile, consumer staples are things you really need, like food, water, etc. Right? So by using this chart, we're able to better gauge what kind of sectors or markets we want to invest in. So obviously, we're coming into a recession, right? So that's why we decided to look into utilities, consumer staples, and healthcare. But we also did our due diligence and we marked down all the sectors, the industries that are in the stock market. And then we decided from all of these industries, which sector best suits the current economy, like the current events, like what's going on right now. And like I said, we made a very big mistake in choosing the bank stocks, which were considered like financials, because a lot of people are defaulting on their loans. They don't have a job. So obviously, if the banks can't collect their debt and they can't make money off the interest, then their sales are going to dip, right? So, and obviously, we don't want to invest in airlines right now because there's nobody really taking planes. Their sales took a dip and they needed a bailout. So you got to be really smart in how to select your stock market sector, right? So um, if you guys want me to share this with you, just comment your email below, and I'll share the sheet with you so you guys can view it and use it as a gauge. You know, when you're doing it with somebody else, you're doing it alone. So we decided we wanted to invest in industrials or consumer staples. So originally we had our eyes set on Target, but Target kept increasing and it wasn't at the price point we wanted, so we didn't buy. And that's another tip is don't chase the market, have the market chase you. You got to know um, what's a good price for you, right? You got to do your due diligence. So we decided to go with industrials, and that's what Whirlpool Corporation is it manufactures household appliances. We figured people are at home right now, they probably need to use more household stuff, so it's an essential thing. So we chose that. Um, and then we gave ourselves tips. I mean, we gave ourselves like tips and reminders. So originally the pick for tomorrow was Target, but because we had already bought Whirlpool and we did homework on Whirlpool already, that we decided to give it a go after looking at their financials again and looking at their the current events for Whirlpool again. And we reminded ourselves it's all logic, no emotions, because a lot of people make decisions with emotions and then they justify it with logic. And like I said, let the market chase us. We don't chase the market. So as we're on the phone, and we're discussing these things, or you could do it on Zoom, whatever, right? We want to make sure that we're trading the right ticker because he could be saying one thing and I'm thinking another thing, and it's just total miscommunication. We don't want that. We want to know what the industry is, what the current price is, and what's the market is trading in. Is it over the counter? Is it NASDAQ, New York Stock Exchange? Did we discuss the night prior? Yes, right? It's always ideal to do so. So we're all on the same page and there's no hiccups when we're about to do things. And we check for the most current financials. We check for the 10K reports because the 10K report shows everything. Like it's a very comprehensive summary. It could be like 300 pages. But what we look for, or what I look for, because it's my job, everything highlighted in green is my job. Highlighted in yellows is his, because my background is in accounting and finance, so I like to look at numbers. And my friend, he really likes to read the news. He likes to get up and watch the news and stuff. So he's that type of guy. So I call myself the fundamental guy, right? I do the fundamental analysis. I look at the numbers. Of course, he looks at it with me, and then he's the technical guy. Where he looks for the trends, like what's going on in the economy, like what's going on right now. Like he's really good with that. He's really up to date with that, and that's why I think we make a great team. And I highly recommend, if you could have a good partner, to do it in teams, because business and investing is a team sport at the end of the day. It's very hard to do it by yourself because you got to do all of these things by yourself. But let's say you have one person, two-person doing it with you. You guys have good relationship. You guys put money together. Everybody does a little bit, and you have a better chance of not taking any losses and making a profit. Because realistically, if you look at a lot of the stocks, right, most of the people buying the stocks, it's not a person, it's organizations, right? It's hedge funds. So you're going against a whole team every day. when you're trading by yourself. That's why I always told my best friend, I said, yo, we got to work as a team. Like you do a little, I do a little, and we'll have a chance of making it. And it became true this week because we came out with $139 gain. Now it's not a lot, but considering both of us don't have jobs right now, hey, like it's something. And if we hadn't have taken the $160 loss, we would have made $300 this week, you know, in three trades, and we're only going to get better. So it's there's definitely options as long as we put our mind to it, right? But let's go back to the day trade checklist. So we check for we check for financials, right? And this is how you check for the 10K reports, right? Let me just show you guys real quick. So Whirlpool Corporation, right? That's what we bought. And usually every publicly traded company, they have like an investor section. So I'm just showing you guys how I would do it. So I'll go to Whirlpool, and then we go to let me see where they went. Where are they? Who we are? Oh, investors right here, right? So investors, and then we go to financial information, right? As we can see, there's a lot of financial information. So we see it's usually a SEC filings. And then we could look for different things, right? Like the quarterly filings, the annual filings, right? This is the 10K report from, they put this up in February, right? And then you could view it in different formats. Or honestly, I really love Yahoo. I'm just gonna go on this because I was already on this. So there's a difference between Yahoo.com and Yahoo Finance, right? I was looking at Alibaba like a while back. So you search for the ticker, and this is why the tickers are important, right? WHR, Sorry, my computer is lagging a little bit. Okay, so then we see it here, and then I would like to go on profile, right? The profile, it shows you their main website, so you could do that as well. But I also like taking a look at their financials through Yahoo, like as a quick glance. And usually it's pretty accurate because any publicly traded company, they need to make sure they disclose their numbers. And if they don't do it, then I probably wouldn't buy it because it's shady. So as you guys can see here, this is 2019, right? This is this is 2019. But if I want to see 2020, I probably want to go on their website. But let's look at the checklist, right? What are we looking for, right? We're looking for income statement. So this is the income statement. And in a nutshell, what income statement is, there's another name. It's called profit and loss. So it's self-explanatory. Is the company making an income, right? So let's look. I like to look at the sales. Right? And Whirlpool is a great buy, in my opinion, because from 2018 to 2019, oh, wow, their sales actually took a drop here. I normally wouldn't want to buy it, but what I probably saw was this, the net income. Net income is the profit after paying off all expenses. So after they paid off all their expenses and the cost of doing business, wow, I'm lagging. I have so many pages open in another window. So as you can see here, right, the numbers are in thousands. So what you see here is 183 million. They actually took 183 million dollars in losses, but they were able to jump back to a 1.1 billion dollars in profit. And I think that's why I bought it, because it's amazing to me how their sales, right, their revenue decreased by $1 billion. Yeah, $1 billion, and they were still able to make a $1.1 billion profit. So by seeing the numbers, I'm like, okay, it's great, you know. And then we look at their balance sheet, and the balance sheet usually shows, you know, what kind of assets they have and stuff like that. Because at times like this, we want to make sure. Oh, sorry, it's not loading. I don't know why. Probably because my computer is lagging. Right. So usually during a crisis like this, we want to buy solid companies with a lot of assets, because with assets, and you know, if the company has a lot of cash, they're able to meet their obligations. They're able to pay their expenses. So they're able to withstand a crisis like this, right? Like, because a lot of businesses right now, realistically, they're not going to be there after. They're not going to exist anymore after a pandemic like this because they just can't hold up. But a company like this is very strong and they can hold up. That's why you can't just buy based off of the share prices. Oh, it's going up. I see it going up. And then you just think that, oh, it's going to go up and you just buy it. You can't. You have to see the financials because the financials is like an x-ray, right? The financial analysis to me is like an x-ray that you're like cyclopsing, right? The company to see if it's healthy or not. And that's why it's so important. And so we go through the financials, and usually if the financials for the company isn't good, we don't even buy it because God forbid if we buy it and we can't sell it within a day or a week, we're gonna have to hold it for a very long time. And I don't want to hold onto something that I'm not confident about. See, Whirlpool, even if it dropped, right? Because it went from like 101 and it dropped to 96 yesterday. But we're not afraid of buying it because we know that at worst we just hold on to it for 1 day or 2 days or even a week or a month or 2 months. We know it's going to come back up because the company is financially solid, right? But if we were to buy a retail store right now, like Macy's, you know, I would be really scared because I know them they're shutting down their stores. They're not getting sales like that. So if I had to hold it, I'd be really scared. So don't ever buy something, in my opinion, if you're not confident in it, like God forbid you have to hold on to it. So definitely check for most current events, right? We got to ask ourselves, is it a good time to trade this particular company or sector? Like I said, have we had done more research and thought about it a little bit more, maybe bank stocks wasn't a good idea. I don't know why I thought bank stocks was a good idea, but during a pandemic like this, why would I buy a bank stock, right? So another thing we could think about, oh, maybe I should buy a pharmaceutical stock, but make sure that the company is financially solid, that it's not just relying on good news for the price point to go up, right? And then we need to also ask ourselves, is there any reason why we shouldn't buy the stock, right? Because if there's so many reasons why we shouldn't buy it, then we shouldn't buy it, right? See, buying stocks is like kind of like baseball, except you don't get striked out if you don't, swing. In buying investments or in doing business, you don't have to swing on every pitch. You could wait for the right moment. It could be 1,000 pitches thrown at you. You don't have to swing unless you're fully confident. And that's how my partner and I, we operate. Like we don't swing just to swing. And we did it with Citigroup, so we're not doing that anymore. So we're only going to trade after we do our research and we're confident that even if the stock were to go down, we know that the company can withstand like a storm, right? So we look at articles and stuff like Market Watch. The most current news, like I said, when you're day trading, it's the current events and the most updated news that affects the stock price. What are the current trend lines looking like, right? So that's the technical analysis, right? Aside from looking for the news, we got to look at the trends. So let's look at the trends together. Um, the market already opened, but we're already out. We're done trading for today. Let me see how much. 99. Yeah, it'll probably go up today, but let's see. So, everything that we're doing, honestly, it still doesn't guarantee that everything that we're predicting is right, but it's better to do your due diligence to lower the risk of you losing. Because if you don't do your homework at all, you're guaranteed to lose. So when we look at the trend lines, this is how we look at it, right? So right here, we can see that this is what we call the resistance, meaning that on Monday, April 13th, people did not want to pay $101.40 for it, right? So when there's a resistance, the stock goes down because people don't want to pay for it. There's no demand for it. So then it drops to what we call the support at 97.80, right? This means this is the lowest price that a person was willing to pay during April 13th. So we need to look at the resistance and we need to look at the support. So if we know that people are willing to buy no matter what at this price, then this is our sweet spot, right? This is generally when my partner and I likes to buy in, because this is like, we don't want to buy at the resistance, because people are going to want to sell it. They don't want to buy. So the prices aren't going to go up from there, right? So we want to buy it at the support level. But then there's always other ways to look at these trend lines. There's so much to it. If anything, I'll put a link in the description for how you guys, can research on the trend lines, because that's like a whole nother video in itself. So as we can see here, this is a downtrend, right? If you follow my cursor, I wish I could draw a line for you. It's a downtrend. So the support level is 98.03, and then it's at 95. So we see a lower low. So this could be a possible downtrend, right? But as we can see, what goes down, it comes up, right? And then sometimes it takes a while for a stock to break its resistance, right? As you guys can see here, nobody wanted to pay more than $101.40, and then people ended up paying $103 the next day. So, but then it dropped right back down. So that tells me the resistance here is pretty strong. So if it's at a strong resistance here, I wouldn't want to buy it at this price, because people aren't going to be willing to pay for it, right? Even if at 102, people don't really want to pay for, as you can see, which is why it dropped back down to 95. So we could see here that the sweet spot is probably around 95 or 96 or 97. So that's why when you see that when we locked in our trades, we locked it in at different price points. Let me see if I can show you guys the different price points that we bought it at. So let me show you guys the order status, right? So as you guys could see here, right, we were buying at 94.50, 95, 96, 98. We made a really hasty decision in buying it at 99. We shouldn't have bought it at 99. So like, it's stuff like that, but it's not guaranteed, because even if we buy at 95, and according to like the 5-day chart or the 1-month chart, right, the 90s look like a sweet spot. It could also drop back down to $60. It could drop down to 80, but that's the risk we're willing to take, because we know that even if it drops at 60 or 80, at worst, we hold it for a month. We know it's going to come back up, because generally, like, we don't know, but we have a good idea it will come back up, because generally Whirlpool is a pretty solid company, right? So let's go down the checklist. So we got to think about what is the price we're looking to sell. So when we were going to buy Target, we wanted Target to drop to 96, and then we sell at 103, and then make an estimated profit of this. And then the estimated hold was 10 days, right? We ask ourselves these questions. How much do we want to make so we don't chase the market? How long realistically are we willing to hold the stock, right? These things you got to think about. So when we saw that, hey, Whirlpool's at 96, let's reevaluate. We're like, you know what? Let's go with Whirlpool. And we estimated to hold it for at least 10 days to sell it at 103, but we sold it at 101, and we're happy about it. And another question we need to ask ourselves is, can we lose as much as we can possibly make? See, the reason why we made the move on Citigroup, and it was a very stupid move, was I was like, hey, you want to scalp it? Like, just make a 50-cent profit real quick? And we're like, yeah. And then it ended up dropping by like $2. So it's like, for 50 cents, we lost $2. So that's why we came up with this question is, can we lose as much as we can possibly make? So here, let's say Whirlpool were to drop $5, but can it go up $5? The answer is yes. So we're comfortable, right? We're making that trade. And are we rushing the trade? Because like I said, we rushed the trade with Citigroup, and that's how we lost. So we have to ask ourselves, are we rushing the trade? If we're rushing the trade, we're not going to do it. Because even if, it ends up going up and we didn't get to make that money, we don't care. We don't care, because we need to make sure that we're doing smart and safe investments, because we're playing with a few $1,000s here. We're playing with our savings here. So we can't be making hasty decisions, which is what a lot of beginners do, because they get too excited. So if you're beginning and you're doing this, definitely do all your homework. Like, you could even, go on Market Watch or TD Trade, like make a virtual account, and just to test yourself, to see if you really got an eye for these things. Maybe, pencil and paper. Okay, I would buy in at this price, and then look at the next day. Okay, what price would I have sold it at? What price did it jump up to? You know what I'm saying? But but then when you're doing the exercise, you're like, damn, I could have made money off of this. No, don't think like that. There's always going to be opportunity as long as you get your skills right. Once you have the skills, you're always going to be able to make money. You don't want to make money based on luck. You don't want to make money based off of not even knowing how you make money off of it. You know what I'm saying? You want to know exactly what you're doing because investing itself is not risky. It's the investor that makes it risky. It's like saying driving is as risky as the driver. It's the same thing because remember, this is an investment vehicle. It's a vehicle, it's a car, right? So if you're driving this car, you want to make sure that you know what you're doing. You have all the skills, you have all the practice that you need. So I'm going to leave you guys with this, man. Good luck on the trading. I'll leave comments below if you have any questions. Um, or like I said, if you guys want this sheet, I can always share it with you. And yeah, just let me know what else you guys want me to share with you. Um, and yeah, I look forward to you guys tuning into to my next video. Um, I hope you guys have a successful, trading week or trading month. Let me see. Let me stop sharing. My thing is lagging. No. I'm trying to like stop this video and I'm not. This is kind of embarrassing right now. So stop sharing and then